Welcome to this overview of the OWPE System E Options Trading Signals Service. I'm going to introduce you to this service. Now, Options Weekly Paychecks is what OWPE stands for, but we've changed it to OWPE for marketing purposes. And so it's a cool concept, and we look to capture these swings and just get out 5 days later. Why 5 days? Because it's an optimized number that makes trading a lot easier. Optimized number that coordinates with what? Fibonacci swing series. So we've calculated over time that by getting out 5 days later with this system, with this type of entry, that 5 days later exits are pretty optimal. Okay, now sometimes moves can go further, but sometimes moves go less if you're going to use some sort of trail stop mechanism. Just very easy, and it's a simplified clarity in the mind to just think, okay, I'm out 5 days later. You can even use contingent orders to exit via time at a certain time before the market closed on the 5th day, for example, depending on your broker. Now, this method is designed for precision type of entries. Okay, precision is the approach we've taken. So we are using precision style entry mechanisms. All right, so we get in, we let it trigger and get out 5 days later. Now, in terms of what types of options to play, well, it just depends on, firstly, what's going on in the markets, and you can be flexible. So if prices are really high, you can go in the money, okay, short term. So you can have high deltas really quickly or right away. It depends how far you go in the money. And that also mitigates premium decay. So you also know your exit before you enter. So it's 5 days later. So you can just go measure the option from out a week, or at least 5 business days to a week before that. All right, and just look at the options change. So if you have 2 weeks to expire options, then you would look at the option you're looking at, and you look back a week, and you compare the difference in premium, and right there you'll get a pretty good picture of what you're looking at for premium decay. You can go up and down the chain to pick that option. Now, of course, you can always be a seller of options, and this is an excellent method for selling naked options. Right now, if you're selling naked options, you'll want to, in my opinion, eradicate some of the problems associated with selling naked options in the past, which was essentially to use leverage. Okay, so don't use leverage, and then don't have any stupid concepts that say stocks always go up. All right, they used to say that. They used to think that stocks will always go up, right? There's a movement back in the day, and so they would sell naked options, and they would roll them out if they were losing into the next month. So eventually the stock would go up and they would make money. So it was just anyway. So you don't want to do things like that. We have stop losses here. Okay, we have entries that are clear. We have stop losses that are clear, and then the exit's already given. It's 5 days later, and that keeps everything nice, simple, and optimized. Okay, so here's a picture of OWPE System E, and oops, we left the terminology here in the on the page there. Anyway, so you can get a picture here, and then we just actually tweak this system a bit to give it an extra turbo booster. So on systems or results like this, shortly when we get those up there, you'll be seeing results that are even better. Okay, so This system is very, very, very solid. Okay, it's based on some long-term fundamental things we've discovered over time, and we put them together with some other different ways of determining things and optimizations, and our entry mechanism, right? And then, as I mentioned, you already know the exit mechanism. So this service is going to provide you a series of trades based on one or two stocks. Now, we've been debating back and forth. Different people like the concept of trading ideas, but you know what? I think the trading idea concept, just putting out a bunch of trades, is not that productive. Maybe for some people, but for most people, they want to see a plan. Okay, they want to see a progressive plan, and that's more profitable for everyone involved. And so then we can get focused on running the system on one or two stocks at a time, and then we may add on additional stocks for additional services. But just running the system on one stock is just incredibly powerful. So here's some screenshots of some recent moves, and we just started the series here with OWPE System E 2.0. Okay, like I mentioned, we recently added some quote-unquote turbo booster factors. We boosted the power of the system. Not that it wasn't powerful in the start, but we just found something else we added to it. Okay, so we captured this, pinpoint type of precision types of move. That doesn't mean it's going to win every single time, but there should be a very high winning percentage. Okay, so we captured this. Okay, we captured this, and we captured this recently. All right, so here's a recent trade on Amazon post-split. Amazon was way up there, okay, in price. It just had I think it was a 20-for-1 split, something crazy. And so we said, hey, look, Amazon has some pretty good options prices too. Let's go capture this move, and we rode this all the way down for some sweet profits. Okay. All right, here's a picture of Roku. Okay. Here's NVIDIA. NVDA. I was wondering if I'm pronouncing that correctly. You can see the series of progressions of trades here. Okay. See how they just keep on adding up, and this is why we want to run OWPE as a system, because we want this type of progression, not a trade over here, a trade over there, and then miss a couple in between because we're hopping around on picking neat-looking trading opportunities, but for putting out a bunch of different trades. So we want this progression. So we see NVDA, the progression. So you can see this. This is an option signal service, yes, but it's also a stock trading signal service. And actually, technically, it's primarily a stock trading signal service, and we're just using different options positions on top of it. All right, so we can see this progression here in stocks. What if you just traded stock? So if you traded, let's say, 1,000 shares, you can see the progression go on here. So we have May 2021 start. Okay, so then see how this progresses. So about a year later, you have 447 profit points. So what does that mean? With 1,000 shares, that's $447,000, right? And that's the type of profit progression that we want, because we want to be able to not only build like this, but we want to start adding compounding. So if you add compounding as you grow and you put the profits back into the shares, let's just say you were trading stocks for an easy, and let's just say you're using 100% of your account because you took a certain amount of money out okay, out of your trading, out of your investing portfolio, or you know, your trading account. You put it aside to trade this method. So you went, you know, pretty close to 100%, no margin, cash only. Okay, 100% position sizes with stock. You can do that with the trading system and with stock because it's not a leveraged instrument. But when you start putting leverage in there, things start getting messed up, right? Okay, so using 100% cash, and let's just say you're, especially for the ease of this example, you're just reinvesting your profits. So, okay, you made 13 points. Now you can buy more shares. You made 8 points. Now you can buy more shares. 3, 14, 3, 13, 5, 3, minus 4, 25, you know, and we progress. So you can, as you're going up, you can buy more shares. And you can, well, when you have losses like this, 4 points, and you would buy, what? A little less shares, right? And then, oh, you made 25 points. Oh, I can buy more shares. So then you keep progressing and you keep buying more shares as your account grows because you have the money available to do so on a 100% invested per trade, no leverage trading account in stocks. All right, now, I know that may sound crazy to some people who are thinking about something they read in a Market Wizards book or somewhere else. If you are allocating your risk capital from your main trading account and you're taking it out and putting it in another account, you are already position sizing. You are already predetermining the amount of risk you're using. Plus, when you use it on a progressive system with no leverage, doesn't it sound logical also to use a 100% position size on a stock, isolated out trading account where you already figured out your max risk to invest into a trading system, into trading a system and a trading account. So this type of thinking is, you know, it's logical. You can, of course, crunch the math on that yourself, but it's good for an example. And so you can see all of a sudden this growth here of these points becomes a lot bigger because every time your account grows, you're buying more shares. All right. So instead of trading 1,000 shares each, you know, pretty soon you're up to 2,000 shares and, you know, whatever. Okay, depending on the price of the stock. So then the actual profit points starts to swell. And that's where we want to be. We, as in everyone involved, you know, we look to trade our own stuff. You know, I can't tell you to trade, you know, per disclaimer language, but if you do, we are focused on providing plans here for everyone, okay? Us, you, and so we can have a win-win. So with a relatively small subscription fee, you can take part in these plans. That word progressive isn't the best word to use. Progressing, we're trying to progress in compound trading accounts through steady progression of growth. That's the goal, okay? That's the goal. So we have these systems to run these signal services as such. All right, looks like the Amazon picture again. So I wanted to make an initial introductory video to give an explanation, a picture, an overview of OWPE System E. It may look strange, sound strange, but it's based on a precision type of entries, and we look to simply get out 5 days later. It's a good combination of things for a very good plan. And so you can see different signal services on this site. Each signal service has its own unique approach and its own value. And so by having multiple signals services, by us running multiple systems, we have diversification for those who like that concept. So we want to have the multiple streams of compounded cash flow. That's the goal. That's about it with this video. Thank you.